President Trump is cracking down on unreliable federal data after firing the Bureau of Labor Statistics Commissioner, Erica McIntyre, last week after months of major revisions to the jobs numbers. All this sparking new doubts on Wall Street about the accuracy of U.S. statistics, which have long guided investors. The president calling the latest jobs numbers rigged, saying that he wants, quote, more competent and qualified leadership at the BLS. He's set to name a new commissioner this week as the White House pushes for more transparency and trust in labor data. Joining me now is White House National Economic Council Director Kevin Hassett. Kevin, great to see you. Thank you so much for being here. And you've said that we need a fresh set of eyes at the BLS. I remember talking to you about the BLS and rigged numbers for years during different administrations. Is this all the deep state, Kevin?
Well, you know, I think that what we're going to see over the next few months is the Council of Economic Advisors is going to go back and look at the data that we've been getting from both the Bureau of Economic Analysis and the BLS and just, you know, look at the revisions and see if there's any suspicious pattern in there. The bottom line is that there could well be. In a very statistically reliable way, you know, a 95% confidence kind of way. But the other thing is just the whether you see a political pattern or not, the fact that the revisions are so willy-nilly means that financial markets don't really know what's going on all the time when they see the number. Like, you could see a number and then the revision is bigger than the number itself a month later, and that's just an unacceptable circumstance. And the bottom line is that there were big movements in this last week when they're huge, you know, bigger than anything we'd seen in 50 years. Revision came out last week. But it's something we've been working on really from the beginning. So over at OMB, we've had a team studying data integrity issues in the U.S., putting together patterns and lists of people that we thought would be the type of persons that could run the BLS and the BEA and other agencies. And so we're very much prepared to make it so that the American people can count on these data 100%. They can know that the people who are running them are professional, and they'll actually have the information they need to see that it's transparently created and it's a number that they can trust. It's the highest priority of the president. It's the highest priority, really, of the entire economic team now, is to get people in there who are going to play it straight with the data, but also be super transparent with how they do that, so everybody once again has faith in the numbers.
And when you say potential suspicious patterns that they're going to look at, I mean, I remember talking with you years ago about the BLS putting numbers out that could help, you know, Democrats put questions ahead of Republicans. So how hard is it or easy is it to manipulate this data?
Well, the problem is that if you want to have like statistical certainty, right, then you need to have a large number of observations that are suspicious. And so there are certainly anecdotes that are very concerning. One of the famous ones in the literature is that right before Mitt Romney and Barack Obama were running for office for president, there was a GDP release that was really surprisingly positive right before the election. I thought I had previously briefed Mitt Romney's campaign that I thought that they were probably going to have a number that looked like a recession. And then, in fact, they got a really big, beautiful number right before the election. Probably had a big effect on the election. And then that number ultimately was revised away. And it was revised away because it turned out that the number happened because of the biggest ever, all the way back to World War II, increase in defense spending. No kidding.
I mean, that is exactly what we've spoken about. That's right.
Yes,
and that's what I'm referring to.
When you see something like that, then you got to say, no, this is not the kind of thing that should happen. Our data agencies need to make sure that the data are trustworthy and not being manipulated politically. And I'm 100% sure that President Trump has made that one of his highest priorities, that we put together a team that produces data that people can 100% trust and that people know where the data came from and can open source it as much as possible.
Unbelievable. Incredible how many agencies have become so political and are actually using their power to affect elections. Meanwhile, Democrats are pushing a bill to protect the heads of federal statistics agencies, including the BLS and the Census Bureau, from being fired by the president. This bill is expected to stall in the Republican-controlled Congress. But what is your take on this push to limit presidential authority to have these people have their jobs forever?
It's in the Constitution that the president has the authority to fire people if they're not doing their job right, if they're not doing the job of the American people. Now, make no mistake, President Trump has no desire to hire people that are going to give him the numbers that he likes. He wants people to go in there and give us numbers that everybody trusts. And that's our highest priority. And if we get somebody in there, and I'm sure we will, we've got a number of candidates, that's somebody that everybody trusts, that's going to go in and try to put a second set of eyes on why these numbers have become so unreliable, and then they make them reliable, then no one would want to fire them anyway. So it's just a moot bill.
Absolutely. President Trump's special envoy, Steve Witkoff, meanwhile, meeting Vladimir Putin in Moscow 2 days before the deadline that President Trump put in place to reach a ceasefire in Ukraine. President Trump is promising to ramp up tariffs on India within 24 hours, calling its purchases of Russian oil unacceptable. He's also rejecting India's zero tariff offer, saying it's not going far enough, while accusing the country of fueling Russia's war machine. Kevin, this is one of those non-tariff barriers that the president is moving on. What should we understand about this?
I think what we need to understand is that the president has closed deal after deal after deal that are really great deals for the American people. We've got trillions of dollars of new investment coming in and trillions of dollars of tariff revenue coming in that they're happy to accept. The partners, more than 50% of GDP, have agreed to a deal where we tariff them and they open their markets for us. India has been a little recalcitrant, but also I think the president has decided that India should not be the release valve for Russia. And that one reason why the Russia-Ukraine war might be going on for so long is that Russia has a release valve through India where it can sell its stuff. And so the president is serious about getting peace in Ukraine and Russia. And I think that getting a better understanding of India's role is what's moved him to this move.
And are there other countries that are on the firing line in that regard, in terms of assisting Russia with its war in Ukraine?
I think that,
what about China?
India and China are different stories. India is the focus right now. And I think our fondest hope is that Russia comes to the table and that we stop seeing the death of hundreds of thousands, millions of young men in that terrible war. And when that happens, then this won't be necessary.
So let's talk trade and tariffs elsewhere, because the president is getting ready for new tariffs on semiconductors, saying a plan to ramp up U.S. chip production could come as soon as next week. He's also turning the heat on Big Pharma, saying tariffs on imported drugs could surge to 250% if they do not start shifting production to the United States. Kevin, do you think this is going to be enough to get these large drug companies to make it in America?
Oh, absolutely. I was at a signing ceremony with Governor Youngkin just a couple of weeks ago, where AstraZeneca was announcing their biggest ever investment in the U.S., a big $4 billion plant in Northern Virginia, where they're going to start making a large share of their domestic production. And so people recognize that it's more secure for America if our production is here. It's better because it creates American jobs. It's just better all around for the activity to be here. And they're moving here in droves, which is why we've got trillions and trillions of dollars of commitments for people to build new factories here. In fact, you're likely to see one today from Apple.
Well, I mean, this is such an important point, and I always view this as a national security subject, Kevin, because President Trump knows that there was a time that China was bullying us and basically saying maybe we won't send the drugs that are needed to America. What's your take on the amount of prescription drugs and the underlying components that are made in communist China and India that we are so reliant on?
Yeah, we are excessively reliant on that, but it's changing quickly. I think, the day could have come where America would be in trouble because of this, but President Trump is getting out ahead of the curve on this, and we're onshoring production as fast as it's possible to, and we're also working out collegial deals with the Chinese to try to, help them prosper while we prosper without the rivalry getting out of control. But 100%, we want to take the things that are necessary for the survival of our country and make sure that they're sourced here in the United States. It's a national security matter, and President Trump has got really full speed ahead plans for all this, including, as you just mentioned, something on semiconductors this week. So
are you worried? Do you think the president is worried that these companies are going to accept these huge tariffs if they don't bring the supply chains here and just pass on the savings or the expenses, rather, to consumers and drug prices go higher? Because I know that's very important to the president, getting prescription drug prices down.
Right. Well, for one thing, right now we've seen that as we've raised hundreds of billions of dollars of tariffs, we've actually seen import prices decline, which means that the importers have had to cut their price that they sell to Americans in order to maintain their market share despite the tariffs. That's about the intuition that you and I have talked about on the show over and over again, that they have a relatively inelastic supply, we economists call it, and so therefore they're going to cut the price and we're going to get the revenue. That's something that has been proven now over and over. I think with respect to drug prices, it's a little bit trickier because a lot of those drug companies have monopolies, and there are drugs where if you don't get the drug, then it could be really bad for you. And so I think that that's something that requires a little more than just the trade negotiation that we've been doing. And one of the things that we've seen is that the president's sending individual letters to individual drug companies describing what he thinks a fair price ought to be, what they ought to be doing in order to help the American people. And I think that these letters to drug companies are going to be a big help in driving down drug prices for everybody.
I mean, you would think that these companies understand the issue, that it is a national security risk and a threat to Americans if, in fact, we're depending on our adversaries for such important things like semiconductor chips to adversaries or prescription drugs for Americans.
Mm-hmm. Yeah, or antibiotics. Most of the antibiotics,
right.
Pretty much the precursors come from China, and that's something that's ending. It's ending. It's just not going to happen. Now, it doesn't mean that we think that we're going to have an immediate problem with China and they're going to shut the thing off. It's just that good long-run planning. President Trump always has his eyes on the horizon. Good long-run planning is to think about things that could go wrong in the future and to be ready for those things, and that's what we're doing right now.
Kevin, what should we expect in terms of the August 7th tariff implementation deadline and this transshipment fee that many on Wall Street are talking about?
Well, I think that everything has been planned from the beginning. This is something that we anticipated would happen about now all the way back in January. And so I don't expect any real disruptions at all. I think Customs and Border Patrol will be ready to enforce the president's tariffs day one. And that's actually one reason why we didn't start them last week, was to make sure that they had the final go before next week to make sure they had everything right.
And in terms of the August 7th tariff implementation for the reciprocal tariffs, any new changes aside from that transshipment tariff?
No, I'm not aware of any changes since yesterday, but it's a fast-moving thing. We've got Switzerland coming in and trying to renegotiate their tariffs, and we'll see how it goes.
President Trump has narrowed his short list for the chairman of the Federal Reserve, and of course, you're at the top of the list. Tell me about that and whether or not your agenda as chairman of the Fed would be very different than what we're seeing right now. What would be your priority, Kevin?
Well, the president has engaged Treasury Secretary Scott Bessent to lead a search process for the Fed. And, I'm humbled to be mentioned in the same breath as some great men like Kevin Warsh along with that search. And we'll see what the president decides. But I can tell you that I've been working with the president now 4 years in office, really, and then since helping on the campaign. And I've grown very close with him. I love working for President Trump, love my job right now. And if there's a future challenge that comes my way, I'd be happy to talk to him about it.
I guess what I'm asking really is about the Fed's agenda, because so many times, the Fed hides behind the mandate, and the mandate being, ensuring employment growth. So unemployment is part of the mandate, and inflation. But I've argued that, of course, if you're talking about interest rates making the debt that we're holding much more expensive because we're paying more on the interest on that debt than we do for defense spending, then that should be part of your thinking when it comes to unemployment and when it comes to inflation, because it's all related. Is this not a priority for Jay Powell right now? And do you think it should be a priority if you know that, in fact, you're saving $350 billion just by cutting interest rates? Should that be something he's considering in terms of his mandate?
Right. Well, the Fed has a legal mandate it's dual mandates, actually, to keep unemployment low and inflation low. And inflation right now is the lowest that it's been in over 5 years. And we just had some negative news on unemployment that was part of the revision that we were just talking about. And so the fact that the Fed hasn't moved against really obvious data that would suggest that they should is troubling. And I think that the highest priority for the president, as with the BLS, is that the Fed be independent, it be data-driven, it be transparent, and it make moves that are right for the American people, not necessarily the moves that are right for one party or the other. And I think that if you look at the pattern of the Fed movements over the last few years, you could wonder, were they putting politics ahead of their mandate, cutting rates right before the election for Kamala Harris and so on. And I'm sure that the president's candidates are going to be a lot different than what you've seen over the last couple of years.
I mean, do you think the Fed board has also been one-sided? I mean, the president is also close to naming a new Fed governor because of Kugler's stepping down. Here's what he said yesterday about this. Watch this. The president has been considering you as the successor to Jay Powell. He said some very nice things about you to me recently when I was talking with him. Powell's term is up in May, but there's also an opening in the Federal Reserve in January. Would you be poised to accept the position on the board in January?
I had that job. I was a governor for 6 years during the financial crisis. It's a great job to have. It's up to the president to make whatever decisions he wants. But I think what we need is regime change at the Fed. And that's not just about the chairman. It's about a whole range of people.
Kevin, that was Kevin Warsh with me a couple of weeks ago, basically suggesting he would not take the job of governor unless he was promised the chairman's job. But the president has to first name governors for the board, right? What do you think of the makeup of the board right now?
Right. Well, the disappointment, Maria, is that we've got a board now where the Democrats seem to be voting one way and the Republicans are voting another way. The Fed is supposed to be a nonpartisan board that focuses on its dual mandates of unemployment and inflation. And when you've got a partisan divide that's really historically unprecedented, then you know that the leadership has failed. The job of the leadership is to drive a nonpartisan consensus at the board, and that's not what we're seeing right now. And so, of course, the board is going to have to change, and the board is going to have to go back to the kind of I worked with Alan Greenspan, go back to the Alan Greenspan approach of driving consensus, having healthy debate, and if there's a move that looks like it might be interpreted as partisan, then you become less likely to do it. You know, there was a time when we looked back at just as a student of the Fed, we looked back at Fed moves and found that they tended to not move right before an election because they didn't want to have the appearance of doing something to try to put their finger on the scale of the election. But then we've got these guys who are willing to do that. And this is the kind of thing that has to change. And I think Kevin Warsh is right about that. It's time for regime change.
It's interesting that so many areas have become so political, Kevin. I want to get your assessment of the economy right now, because we just spoke with Maya McGinnis, and she was telling us about the CBO scoring of the big, beautiful bill and her expectations of it adding to debt. But I asked her about the impact of AI and the impact of growth as President Trump has prioritized growth. What is your expectation in terms of overall growth in this economy this year and next year, but also the component of new technology and AI adding fuel to that growth?
Right. Well, in terms of the AI effect, my friend Eric Brynjolfsson at Stanford, a former colleague, has done a lot of really careful work on the impact of AI on America's workforce. And I would say that my review of his work on that and the work of others is that we should increase productivity over the next 4 to 5 years because of AI by 1 to 1.5% per year. Now, if you think that because of the big, beautiful bill, we're cranking away at, say, 3% growth, then that means that you could be looking at 4%, 4.5% numbers for 3 to 4 years because of AI plus the big, beautiful bill. And so I'm about as optimistic about economic growth beginning really in July, because that's when the bill passed, as I've ever been, certainly on your show, Maria.
I mean, it's pretty incredible when I speak with money managers and heads of businesses right now as a result of the president's policies, whether it be extending the tax cuts or expensing changes in the tax law to the new ideas around AI. They're talking about some substantial growth. What would be your expectation for 25 and 26 on growth?
Yeah, I think I'm looking for numbers. I'm more optimistic than the current Council of Economic Advisors chair because, my previous job before December was that I was working at Stanford with Eric Brynjolfsson and looking at all his work, that I got very convinced and, played with the data, that the productivity gains from AI are going to be enormous. The way to think about it, Maria, is that I don't know if you ever play chess. I used to play chess. And if you play chess.com, then the chess.com AI is better than Magnus Carlsen. It could beat anybody.
Wow.
But if you go and ask the AI to give you a little help, to help you cheat, if you like, then you get really, really good at chess fast. It's like the best coach ever. And the thing is that what AI has become is the best coach ever in all sorts of walks of life. And so think about every worker in America, if they got their phone there, if they're wondering about, like, how do I do this? How do I get, like, this nut, on this bolt? Then AI will explain it to you. So you've got the best coach ever. So, of course, productivity is going to go up a lot.
Yep.
Of course, that means growth can be way north of 3.
But Kevin, is there a plan to replace those jobs that no doubt will be lost as a result of AI as well?
I don't think we're losing a lot of jobs. I think we're just getting way better at the jobs we're doing.
Great. Kevin, great to have you this morning. Thanks so much.
Thank you. Thank you, Maria.
Kevin Hassett at the White House. We'll be right back.